Welcome back to our BSAD 101 video series. Today's video is Chapter 8, and more specifically, it's over a bank reconciliation. As was emphasized throughout this class, accountants always like to prove balance or reconcile balances. And cash is one of the most important balances that we want to make sure 100% that we've got it correct. Fortunately, cash is an account where somebody else keeps our balance for us also. Of course, we keep our records of our cash balance, but the bank also keeps a record of our cash balance. So at some point in time, whether it be every day, every week, every month, we need to prove that our balance is correct with the bank's balance. Now, maybe some of you do this with your own personal checking account. I hope all of you do, but based on experience, not everybody reconciles their own personal bank accounts. With a business, it's extremely important that we reconcile our balance. We've got more cash involved, and it absolutely must be done. And today, the way that there's so much fraud today, and it's so much easier to commit fraud, it's absolutely essential that even you personally reconcile your bank account. But what we're really going to focus on is a business bank account. We're going to do an example of a bank reconciliation. I thought that would be the best way to help you. So I picked a problem from the book, so hopefully you've got your book nearby. If you don't, go ahead and put the video on pause and go get your book. If you do have your book, go ahead and turn to page 351. We're going to work problem 8-5B as an example. So take a look at that, and I'm going to go ahead and read this here. Coincidentally, I have my book nearby here, and so I'm going to read the opening paragraph here, and we're going to dissect what's going on with this problem. It says, Tamsin Systems most recently reconciled its bank balance on April 30th and reported two checks outstanding at that time, number 1771 for $1,037 and number 1780 for $516. Okay, that was on April 30th. That was actually, this period that we're doing now is May. So that was at the end of the previous month. They had those two outstanding checks. The following information is available for its May 31st reconciliation, and you see the first document they have given you on the top of page 351 is the bank statement as of May 31st. Then right below that are some additional documents. The additional documents are the cash receipts that have been deposited in our accounts. These documents here are for us, Tamsin Company. So we've got the cash receipts that are deposited, and then we've got our cash disbursements on the right side. And then right below that is a summary of our cash account in the general ledger. They've given us some additional information down at the bottom, and we're going to briefly go through that right now. Just read through it, and then we'll dissect it in more detail. Check number 1788 is correctly drawn for $238 to pay for May utilities. However, the record keeper misread the amount and entered it in the accounting records with a debit to liabilities expense or utilities expense and a credit to cash for $228. The bank paid and deducted the correct amount. The NSF check, NSF of course we know is non-sufficient fund. The NSF check shown in the statement was originally received from a customer, W. Sox, in payment of her account. The company has not yet recorded its return. The credit memorandum is from a $1,540 note that the bank collected for the company. The bank deducted a $20 collection fee and deposited the remainder in the company's account. The collection and fee have not yet been recorded. All right. Based on all this, we are going to do a bank reconciliation. Now, I would suggest that you again pause the video here and look through this problem in more detail. Underline and highlight some of the key facts. Make yourself aware of what is going on here with the Tamsin Company. All right, after you've done that, I want to show you how I like to set up a bank reconciliation. The first thing I do, as you can see from our first slide here, one thing I am missing here, I don't have a heading. I didn't have space in my PowerPoint to put a heading on here. So you do need to put a heading, the name of the company, the fact that it is a bank reconciliation, and this is as of May 31st. All right, what I do though is I put the bank balance, and the bank balance according to the bank statement is $22,070. The book balance according to our records, and I got that off the cash account in the general ledger down near the bottom, is $21,164. Then what I do, I always set the bank reconciliation to the same format here. I put a place to add to the bank side, and I put a place to add to the book side, and then I put a place to deduct from the bank side and a place to deduct from the book side. That way, as we go through the data and dissect the data, we can appropriately put each item as either an addition to the bank, an addition to the book, or as deduction to the bank or deduction to the book. And so by setting it up like this, all I have to do is dissect the information one thing at a time and determine where it should be placed on the bank reconciliation. Okay, having said that, let's start at the top, and I'm going to go right in order as the data is presented to us in the problem. And let's dissect this and decide where each item should go on our bank reconciliation. Okay, let's start with the outstanding checks, because that's the first thing they mentioned at the very top of the problem here. We see that there are two outstanding checks at the start of this accounting period. Check number 1771 and check 1037. All right, look down in the bank and see if those two checks are still outstanding. And you can determine that by looking on the bank statement under checks and debits. And if you see, the very first check there is check number 1771, isn't it? So that check is no longer outstanding, so we don't need to worry about that one. How about check 1780? Did that come through anywhere on the bank statement? No, it doesn't look to me like it did. So you might make a note, maybe in the margin of the book or something, that check 1780 for $516 is still outstanding, so it still needs to go on the bank reconciliation. Okay, now, there may be some checks that we wrote this month, May, that are outstanding. So what we need to do here is go down to the cash disbursements record there, where it shows all the check numbers that we wrote during this accounting period. Compare that with the checks up here under checks and debits on the bank statement, and I want you to pause the video and go ahead and determine what checks are outstanding. We know that the check number 1780 from last month is outstanding, but what additional checks from this month have we written but haven't been processed through the bank yet? So go ahead and pause me and check that out. Okay, you've had time to determine the outstanding checks, and as you go up and compare them, hopefully you have that there are 3 total outstanding checks. Number 1780 from April for $516, and check number 1786 for $935. You can see we wrote that for $935, but it hasn't come through, hasn't been processed by the bank yet because it's not showing up on the bank statement. And one more check, check 1789 for $371. Okay, so we add those 3 up and get the total, and that total now, where are we going to place that on our bank reconciliation? Think about who has not yet recorded those outstanding checks. Well, we've already recorded them because we recorded them in our cash disbursements journal there. But the bank hasn't received them yet. The bank hasn't recorded them yet because the bank doesn't know about them. They haven't come through the bank yet. They're outstanding. Okay, so so we know we need to place them on the bank side. Now, would these checks reduce our cash balance in the bank, or would they add to our cash balance in our banks? Well, if you said that they would add to our balance, you are correct. And so, or I'm sorry, you're incorrect if you said add. You're correct if you said deduct. I was so shooken up there trying to figure out where to point to this thing that I lost where I was at. outstanding checks reduce the balance, don't they? So we're going to put that under the deduct side for 1822. The 1822 is the sum of those checks, 935 plus 516 plus 371. Okay, let's go to the next item. Well, we're talking outstanding. Let's think about outstanding deposits now, okay? We're going to determine if there are any deposits we made but that the bank has not yet recorded, hasn't been processed through the bank yet. So look at the checks we've deposited by looking at cash receipts deposited down here on the left-hand side of our records. And you see we've got about 5 checks we deposited in our accounts. Now I want you to compare those with the bank statement column where it says deposits and records, and determine again what deposits have we made and recorded in our account but have not yet been processed by the bank. So again, put me on pause and go ahead and determine what, if any, outstanding deposits we have. Okay, hopefully you have completed that task. And did you come up with only one outstanding deposit? Because that's what I calculated. That the deposit made on May 31st for $1,716, we recorded it in our records, but the bank has not yet processed that. So the bank doesn't know about it. So again, think about it. What side are we going to put this on? Well, we know about it. We've already recorded it in our records. So it's going to go on the bank side, isn't it? Then think about, is this going to add to the bank's record of our cash or deduct from the bank's record of our cash? And as you can see from the next slide here, that it adds to it. Okay? It adds 1716. By the way, also, as you notice, I put a parentheses down here in any negatives. That's just the way I'll always do it. If it's a negative, I'll put a parentheses in. Okay? All right. The next item I want to look at is, let's go down to that error, down to the additional information down at the bottom of the page where it says check number 1788 is correctly drawn for $238. In other words, we correctly wrote a check for $238 to pay for May utilities. However, we recorded it as only $228. I like to verify things. Did we really record it as $228? How do we know that that's what we did, that we really made that mistake, other than them just telling us here at the bottom of the page? Well, if you look up at our cash disbursements record and go down and look at check number 1788, you can see that indeed it's recorded there for $228. We wrote the check correctly for $238, but we only recorded it for $228. In other words, we made an error, didn't we? We need to correct that error. We made a $10 error. The bank's not involved here. It's all us. So this is going to be recorded on the book side. Will this increase or decrease our cash? Well, we need to decrease our cash another $10. And so you can see here that indeed that's what we did. We decreased our cash by another $10 here because we made an error. We only recorded a $238 check for $228. So to correct that, we need to deduct another $10. Okay? Let's go to the next item. The next item they mention is the non-sufficient fund check. And again, they just mention it at the bottom, but did it really happen? Well, if you look at the bank statement, under checks and debits, you see that they reduced our account by $688. We had made a deposit. We received a check from a customer. We made the deposit. We recorded an additional $688, assuming the check was good, right? The bank did the same thing. The bank processed the check, and it came out that the check was no good. So the bank went ahead and deducted that $688 from the bank records of our cash. But we are just now finding out about it. So what do we need to do? Well, we need to do something on the book side because we haven't recorded that bad check or that non-sufficient fund check yet. So it needs to be recorded on the book side. Would we add that, or would we deduct that to the book side? Well, if you said we would deduct, that's correct. The check's no good. So you look at our next slide here, and you see indeed we did deduct that from the book balance. So that takes care of the non-sufficient fund check. All right, the next item, let's just go to the credit memo. You see over here, well, on the bottom, actually the very last line, it says, the credit memorandum is from a $1,540 note that the bank collected for the company. The bank deducted a $20 collection fee and deposited the remainder in the company's account. Let's verify that the bank indeed did that. So let's go to the bank statement. And if you look under deposits and credits, you see indeed on May 25th, the bank deposited or increased our account by $1,520. Have we done that yet in our records? No, we're just now receiving this information. So we need to make an adjustment on the book side of the bank reconciliation, and we are going to add that because that was an addition to our cash balance. So you can see there I added note in for 1520. The next item is the service charge. Did you see that SC there? Service charge. Under the bank statement, checks and debits, they reduced our account by $22. Well, let's see, how much cash do we have in this account? A little over $20,000. I think if I had a little over $20,000 in the bank statement, I don't think I'd want a $22 service charge. Maybe it'd be time to look for a new bank. But regardless, they charged us $22. We're just finding out about this. The bank already has recorded the $22 service charge, but we haven't recorded it on our books yet. So we need to make an adjustment to our books. Is this going to be an addition or deduction? Well, usually fees are deductions, aren't they? So as you can see from our next entry there, we deducted the $22 service charge from the book side. All right, that should take care of all adjustments that need to be made. And now our moment of truth. Now what we're going to do is net out both sides, the bank side and the book side, and we're going to see if they balance out. So net everything out, go ahead and do that, put me on pause, and see if we don't balance out. Okay, after netting everything out, you can see I've done my work here while we were on pause, and what do you know? We've got an adjusted balance of $21,964 on both the bank side here and on the book side here. So that's good news. We balanced out, didn't we? So if I asked you, what is our cash balance on May 31st? After we've done the bank reconciliation, we know that we have our cash in the general ledger account, but if I said truly, what is our cash balance? Would it be the amount that's in the cash account in the general ledger, or would it be the amount that's in our bank reconciliation here? Well, it is the $21,964. That indeed is our cash balance. That's it.